Today's entire modern financial system is a scam and is operating on an infinite money glitch, which is evident from the recent rapid inflation in the world due to the USA printing more money in the last few years than in the last few hundred years. In the modern banking system, billions of dollars are created out of thin air. This is increasing the gap between the rich and the poor as money is being siphoned up from all of us to a very small group of wealthy people. This is called fractional reserve banking, where 97% of the money in circulation is created when banks make loans. Most people assume that when banks make loans, they're lending out someone else's savings. But the reality is that commercial banks create money from nothing and then lend it to borrowers at interest. When somebody takes out a loan, banks create new money electronically by typing numbers into their account. The more loans people take, the more debt there is, and consequently, more money is created. If nobody went into debt, there would be almost no money in the economy. Our economy relies on the electronic money created by banks. The money is created when people borrow, and someone somewhere has to pay interest on every pound created. Essentially, we are renting the money we need to run our economy from the banks. In the UK alone, people collectively pay banks over £200 million in interest every single day. Because the debt is held mostly by the bottom 90% and wealth mostly by the top 10%, paying this interest transfers money from the bottom 90% of the population to the very top 10%. It funnels wealth and income from the rest of us up to the very fortunate few. So, as long as we have to rent the money we use from the banks that create it, we'll have to keep paying this significant interest bill, and the gap between the wealthiest and the rest of us will keep increasing. If people understood what the banking system is doing, there would likely be a revolution, as Henry Ford suggested. Counterfeiting money at home is illegal. Cooking the books and accounting is fraudulent. But when banks create money out of nothing, it's perfectly legal. Governments and banks often try to shift blame onto the public, claiming wage claims are too high or blaming speculation for inflation. However, they seldom acknowledge that banks are creating money out of nothing and injecting it into the system, thereby driving up prices. Since President Nixon took the United States off the gold standard in 1971, the world has operated under a system of fiat money. Fiat currencies like the dollar, pound, and euro are all government fiat currencies. Fiat, a Latin word meaning "let it be so," grants only the government the power to issue fiat money, yet banks can create it through lending. Over the last 40 years, since fiat money became the global norm, the money supply has grown exponentially, benefiting governments and banks primarily. But who benefits from this system? Those with the power to issue money, governments and banks. Companies and individuals who receive this money early can spend it before prices rise to reflect the increased money supply, essentially obtaining goods and services cheaply. However, prices soon rise, allowing holders of assets to see gains without necessarily improving the asset. Meanwhile, those at the bottom of the economic pyramid, such as those on fixed wages in remote areas or with savings, find their purchasing power diminished as prices rise faster than their incomes. In practice, the fractional reserve banking system can create an infinite money glitch if lending and borrowing become irresponsible and widespread enough. If all depositors were to demand their money back simultaneously, known as a run, the bank would not have enough funds to reimburse everyone. The exact cash requirements for banks in the U.S. are set by the Federal Reserve, which conducts stress tests to ensure banks can withstand potential crises. However, the fractional reserve banking system is susceptible to financial fraud or misrepresentation of loans. If the bank lends out this infinite money, assuming it will be repaid, but borrowers default, the bank faces significant losses. The stress tests conducted by the Federal Reserve assess banks' abilities to remain liquid through default scenarios. Nevertheless, unexpected default rates, often due to fraud, can lead to systemic collapse. Overall, the fundamental principle of modern banking, fractional reserve banking, and the questionable money it creates remains a significant issue.